Welcome to Trade Ideas. I'm Jake Merl, sitting down with Tom Bruni of All Star Charts. Tom, great to have you back on the show.
Thanks for having me, Jake.
So today we're not going to be talking about just any chart. This is a special chart. This stock has actually hit resistance, 5 times or so over the past year, and we're looking to get your thoughts if you think it's finally going to break out. What's the stock? What's the chart? What are you looking at, Tom?
Yeah, we're seeing AGCO, ticker symbol AGCO, breaking out above $75. Like you said, it's been bumping up against that level for about the past year and a half, kind of like the broader market. It hasn't gone anywhere, and now it's finally exceeding that level, and I think it heads a lot higher.
And so how did you come up with this stock to begin with? How did you first come across this name?
Yeah, last week I was here talking about mid-cap industrials. We talked about Herman Miller. So AGCO is kind of in the same space. It's a mix between an industrial and a basic material stock. It's actually within the agribusiness subsector, which I'll get to. But yeah, I was just scanning through that area, looking for areas of strength, and I saw this come up on the new highs list, and I was like, all right, here we go.
And why do you think now it's finally going to break out rather than the past 5 times when it didn't?
Yeah, well, we're already above that level. I think it hit 77.5, 78 over the last few days, and now it's kind of consolidating. So the market is showing us that the supply that was at that $75 level is now exhausted, and buyers are stepping in where they need to.
So in terms of supply, and when you say horizontal resistance, what exactly do you mean by that?
Yeah, so horizontal resistance is a lot easier to understand than like a trend line per se, or other forms of support and resistance, because you can see it. It's very clear. So every time the stock got up to that $75 level, sellers stepped in and they pushed the stock price lower. So there wasn't enough buyers to absorb all of the supply that was coming on the market at that level, and so prices had to go lower. If sellers wanted to get out of the stock, they had to accept a lower price because the buyers weren't there. And so we've seen that happen 4 or 5 times, and now the 5th time we're finally seeing buyers exceed the amount of sellers and take the stock higher. So that might sound strange to some people because, if there's a transaction on the exchange, there has to be a buyer and seller for every transaction, right? But there's not a buyer and seller, the same amount of buyers and sellers at every level, right? So if the stock's at 75 and there are 500,000 people that want to buy it, but there's only 300,000 shares available, they have to move the price up to find that supply. So there's not the same amount of sellers as buyers at every level, and that's what we see, kind of the battle between the two to figure out which way the trend is going and who has control.
In addition to that horizontal resistance, are there any other technicals you're watching that's confirming your thesis?
Yeah, so on an absolute basis, I think it's interesting. Momentum is getting overbought. That's a good signal. We're seeing prices consolidate above that level. They're not breaking back below it and confirming a failed breakout. And then additionally, if you zoom out, the chart of AGCO is actually breaking out of a decade-long base. It's just now getting above its 2007 highs. So it's basically done nothing for 12 years. And this looks like a structural breakout that's ready to take the stock higher over the long term, which is why I think we need to be paying attention.
And how much higher do you see it going?
Well, the chart I brought is more of a short-term trade. We're just using the base from the last 18 months to create our measured move and our target, which I believe is at 91. But over the long term, this is a massive base. There's a saying called the bigger the base, the higher in space. So the longer a stock consolidates, the more pent-up energy that builds over time, the more powerful the move out of it. So, for the short-term target, we'll stick with 91 and we'll reevaluate at that point. But I think over the long term, as long as we're above that 2007 highs, I think the bias needs to be higher.
So you said this was a short-term trade with a price target of 91. Over what time horizon do you expect this to play out?
Yeah, so I think 6 to 12 months, that's not exactly too short-term, but when you're talking about a decade-long base breaking out, you can see this move happen for many years to come. But we'll take it one step at a time. We'll see if it gets to 91, and then we'll reevaluate.
So Tom, we've been focusing a lot on the specific stock, but if you zoom out, what are you looking at from a broader perspective?
Yeah, so equities in general, if we look at something like the S&P Global 100 as a benchmark for equities around the globe, it's breaking out to new all-time highs. It's getting through the resistance level from the last 18 months or so. If you look at interest rates, last week I discussed some of the divergences we're seeing that suggested a bounce in interest rates around the globe is in the cards, and we're starting to see that unfold. the 10-year is back above 2.04, which is the closing low from September 2017. So we have a bullish momentum divergence there, a failed breakdown that's now confirmed, and so we think that's a catalyst to take rates higher over the next few months. The structural trend is still lower, but we think that tactically we can be short bonds here. And so if money's flowing out of bonds, equities are hitting new all-time highs, I think it makes sense that money's going to flow from fixed income into equities and support this rally. If you're looking at the industry group, so it is part of the basic materials sector. We're looking at the XLB. It is breaking the downtrend line from the 2018 highs, and I think it's setting up for a retest of those 2018 highs, so that will be a tailwind for the stock. And then if you drill down even further to the industry group, the agribusiness ETF, ticker symbol MOO, is attempting a breakout from a 12-year base. It hasn't gotten above those 2007 highs, ever, and now it's doing that, very similar to AGCO. So if we're seeing equities as an asset class breakout, we're seeing basic materials breakout, we're seeing the subsector agribusiness breakout, and now we're seeing the individual stock breakout. Those are all tailwinds for the stock. And the final chart I think that's worth noting is, within basic materials, agribusiness has been a leader for quite some time. It's a long-term bottom. It's been basing for the last 6 or 7 years, and it's finally trending higher. So to me, that signals that agribusiness is the area we want to be within materials, and within agribusiness, AGCO is one of the strongest names. So I think it makes sense. You have a lot of tailwinds for the stock, and your risk is very well defined, which is what I look for.
So the setup for the stock looks really good right now, but just in case things don't go your way, what would you say is the biggest risk, and also where would you put your stop loss?
Sure. So let's start with the stop. I put a stop wherever the thesis is invalidated. So that would be under 75. Some people might use, closing stops. Some people might use a time stop where it has to close below that level for 2 days before, it needs to before you take the exit. For me, I'm not managing billions of dollars, so I have the flexibility of getting out and then quickly getting back in if it starts working. So if it breaks below 75 on a closing basis, I'll take the trade off. If it gets back above 75 and starts working again, I'm happy to put it back on. In terms of the risk to the trade, like I said, there are a lot of things going for it from a asset class, from a sector, from an industry perspective. But at the end of the day, it's going to have beta from the broader market. So if this is a failed breakout in the broader market and equities do pull back, you'll probably see AGCO succumb to that selling pressure. And because our stop is so tight, we're giving it about 3% from current levels, you'll probably get stopped out and then have to get back in if it begins working. With that said, I do like it longer term, so if you want to do something like reduce your position size and use a wider stop, that's certainly an option. For me, I'd much rather take the loss and get back in if it starts working.
Well, Tom, that was great. We'll see how it plays out in the months to come. Thanks so much for joining us.
Thanks for having me.
So Tom is bullish on AGCO, ticker symbol AGCO. Specifically, he likes buying it at current levels with a stop loss at 75 and a target price of 91 over the next 6 to 12 months. That was Tom Bruni of All Star Charts, and for Real Vision, I'm Jake Merl.